Welcome to the NWR Investor Conference series. My name is Elliot Hasty. I am a presenter here at AusBiz, and it's wonderful to be with you all this afternoon. Now, our next guest is Envirosuite. It's at the forefront of environmental intelligence solutions. It's an entity that stems from the combination of air quality and meteorology consultancy, combined with real-time and predictive technologies, as long as world-leading innovation in that sort of aviation space. It's got capabilities across air, noise, water, and vibration. But I'll leave it to the boys to tell you more. We've got Jason Cooper, Andrew Barron, and Matthew Patterson all online, and they will tell you all about Envirosuite. But don't forget, if you do have any questions, just put them in the Q&A box on the bottom right of your screen so we can ask them at the end of the presentation. Take it away, guys.
Thank you, Elliot, for that great introduction. I want to have a warm welcome to everybody, people who may have been listening to the Envirosuite story for the first time and those who are already familiar with it. We want to talk about the real huge opportunity that we see and the critical role that Envirosuite has in charting a new path forward for the world as it starts to understand how industries and communities actually start to thrive together. So Envirosuite is Australia's best kept technology secret. We have been helping customers around the world for the last 30 years, but more recently have started to accelerate really within our environmental intelligence play. We have got over 300 customers globally in different sectors as aviation, industry, and water. We have got best-in-class customer retention with less than 1% churn each year, and we're growing at a very rapid rate. We have a strong roadmap, absolutely committed to building out that part, and today you will start to understand what we do and how we make an impact for our customers. So environmental intelligence is a word that is starting to gain traction, certainly within our customer base and within the wider audience. But environmental intelligence at its core is actually taking environmental parameters, running through some strong algorithms to be able to turn into some insights that customers are able to make decisive decisions. And the strength of that environmental intelligence will help them make predictive decisions, both at an operation level, at an environmental and an ESG level, but also the impact to certain societies and communities that they impact. We are driven absolutely to create a better environment here for our customers to be able to thrive and survive in that. We have got three key and distinct product lines and sectors that we serve. So airports, we are number one globally within noise monitoring. This is a very stable business with continued growth that we see in the coming years. Within that sector, we actually have multiple software offerings. An example of a customer is Heathrow. So Heathrow use us for the noise monitoring, understanding when planes land, from how the runways are being used, the tarmac, from carbon tracking, and also community engagement. And this is an example of one customer within the airport space, but we have over 100 of these commercial airports globally. Another part of our business is the industrial platform. That we are focused on two primary sectors, mining, then waste and wastewater. An example of the mining customer could be FMG Port Hedland, where they are actually using our software to understand how and when to load ships so that it actually minimizes the impact to the community of Port Hedland. Within the water space, we actually have got new IP that we've recently commercialized back in November last year. We've already seen 3 significant contracts being awarded to us, which absolutely validates the product market fit. We see a huge opportunity within the water environment moving forward because we have such a strong impact on the return on investment for water facilities. An example of one of the customers recently was GHD, where they're actually using it for their designer platform. This actually reduces the time that they have to bring a design to market. So with that, I'm now going to hand over to Andrew to talk a little bit more around our product.
Thanks very much, Jason. So before I jump into our products in a little bit more detail than Jason went into, I wanted to just outline the premise of the offering that our customers across all different segments see in it and our capabilities. Essentially, we offer an incredibly powerful value chain for our customers and the communities that they operate in. It's made possible by the depth and breadth and expertise of our organization through the decades that we've been providing in-depth services to these industries. If you don't use EVS technologies and our capabilities, you generally can't achieve these outcomes or need to do it through use of multiple suppliers, systems, and personnel. It's very much a differentiated offering that we're able to provide based on our DNA. The three levels that make it an incredibly compelling opportunity for ourselves and our customers are optimize, engage, and comply is how we outline them. Optimization is at the true height of the value chain. It provides our customers the ability to efficiently and effectively respond to the ever-changing operational demands they have, married with the environmental conditions, which can have a significant impact on their decisions operationally, both for their own efficiency, but also for the impacts of the community around them. So by using Envirosuite, they can operate in unison with their environment and their operational demands and make choices that are unprecedented in their ability to ensure that they maintain compliance, but also maximize their productivity through uncertain times and weather conditions. The second layer to this is engagement. What Envirosuite does is it provides a trusted, mutually available data set to not just our customers, but the communities that they operate in, giving them the ability to have a constructive conversation about the environmental matters that are impacting both of them so that they can continue to both grow together. As the population continues to grow globally, the community becomes an ever-increasing stakeholder in the ability for industries to grow and those communities to grow alongside them. So the ability to interface the two significant players in that way gives something of a social license to them to continue to operate. And the third significant pillar of the value chain is compliance. There's an increasing demand for regulation that's consistent around the world and growing substantially in certain geographies that we're very active in as well. This gives organizations a further need to reduce their environmental footprint, to increase their reporting towards that, or tighten their operational parameters. Any of those three are significant compliance barriers that continue to grow that they need to use Envirosuite to manage. As an example, since the mid to late 1970s, there's been over a 35-fold increase in the environmental laws and regulations that impact our customers. So it's absolutely significant. So those are the three different value propositions that we offer our customers. And now I'll get into a little bit more detail about the solutions that we offer our customers in the space that we play in. Our aviation industry is part of our 30-year history, where we have over 100 different airports. As Jason mentioned, London Heathrow is one, Toronto Pearson International Airport is another, LAX, and all the major Australian airports and hubs are strong customers of ours. The solutions that we offer to those customers are diverse and deeply embedded in their organizations and operational decisions. Those solutions are things like noise abatement, curfew management, glide path and corridor optimization, carbon emission tracking, and their carbon footprint information, through to community interactive portals to allow, again, communities and the airports to see mutually accessible information, to have constructive conversations about potential breaches or potential opportunities for the airport to expand and how that could be best managed. So they're absolutely vital to the aviation community and the communities that they work within. With our market share and our expertise, we continue to drive more deeply into the operational capabilities of an airport and allow them to operate much more efficiently, which is incredibly topical for them as they look to expand with reduced staffing numbers globally and a potential significant influx in air traffic over previous periods. The industry anticipates to have annual growth in the next 12 months, similar to what would normally be a 5-year growth horizon. And with many people still working from homes, they're incredibly much more impacted than they would traditionally have been when they were at their offices. So an example of a daily customer question that you may get in this area is how can the airport optimize their flight paths tomorrow to reduce the community concerns of recent issues that they may have got? And being able to answer that both helps the community, helps the airport operate more efficiently, makes them a more desirable airport for carriers to work with. Secondly is our offering in the water industry. This is the fastest growing sector at Envirosuite. It's fueled by the acquisition of unique technology from AQMB completed last year and a partnership with the University of Queensland around a product called SUEX. And it responds to one of the fastest growing and increasing valuable assets in drinkable water throughout the world. So there's an incredible tailwind behind that industry as it becomes a much more scarce resource that we need to manage more effectively. The solutions that we offer in the space are the ability for processing facilities to use a combination of deterministic modeling and machine learning to achieve operational efficiencies, whether that be through the use of power or the more effective use of chemical dosages so that they can do that most effective, they can achieve their regulatory requirements as efficiently as possible. And that's something that consumers can benefit in every day. So the question they may be asking daily is based on the chemical makeup of the water going through our drinking water facility in the last 24 hours. How can we effectively reduce the amount of power we need while still maintaining our regulatory compliance over the next 24 hours? And it makes them save significant basis points in the operation of the facility every day. And thirdly is industrial. This is an area where we've been providing deep domain expertise for over 20 years into. The solutions that we offer in the industrial space are across noise, dust, vibration, air, and water quality, including things like odor. Pairing our ability to sense those things, both in the field with the meteorological modeling that we do, gives asset owners and operators the ability to make decisions about near-term and medium-term operations that they would have never been able to do. It allows them to take that changing environmental landscape and make an active decision about whether or not they should continue with an operation. They could increase the operation whilst maintaining a negligent impact on the community around them. As far as what an industrial customer may ask on a regular basis, they want to know what optimal time they could potentially load an ore onto a ship with increasing wind conditions in a certain direction tomorrow. And being able to decide to do that early in the morning as opposed to late in the afternoon pays absolutely incredibly for them within that operational period and helps them maximize their opportunity whilst making sure their community is continually engaged with what they're doing. Our focus area in that segment is taking the world-leading vibration and noise sensing that we have from our aviation industry and combining it with the air quality, dust and odor sensing capabilities into a global platform that supports all of those different measurements into one system, which provides our customers never before accessible insights into their facilities.
Okay, thanks, Andrew. Now, so I'm Matthew Patterson, the CFO of Envirosuite. Thought I'd go through and talk to you all a little bit about kind of what we see as the overall market opportunity and kind of how we participate in that market. So first off, when we go through and look at the overall market size, I mean, this market continues to grow for us as we've gone through and made acquisitions or we see the market evolve. We used to go through and view that the market was about 2.3 billion. It's now getting up to 4 billion and probably going beyond that. At the end of the day, Andrew talked us through the three product sets. Overall, we feel that the market is continuing to grow as the level of environmental regulation grows and the expectation for communities and government for industry to continually comply with the growing amount of environmental regulation increases. We've seen this from comments from the U.S. administration about environmental justice and things along those lines. The ability to go through and rely on just environmental consultants to provide you with a periodic report is kind of going away. And our view is that actually misses the opportunity around all this data you collect to maintain compliance, actually gives you some great insights into your operations. And our tool actually allows you to go through and give you some actual insights through the predictive models that Andrew talked about, as well as kind of the outputs about here's the actions you can actually take again, Andrew mentioned. So overall, we feel that we are just starting to tap into this wider market. We have individual competitors in different geographical segments and in different industry segments. But there's no really one true global competitor that kind of does everything that we do, at least not the one we've been able to identify. So our main competition of going into this larger market is really around the growing trends and the tailwinds that come through, removing what companies might be doing today around periodic reports coming from environmental consultants, and actually get into real-time data, predictive modeling, and the likes. So this $4 billion market is based off our pretty bottom-up analysis, looking at industry players who are close to large pieces of population and are required to be regulated. So we feel it's a pretty reliable number to look at. And again, we would even view it as conservative. We assume that the average revenue per site that we grow to is about 50,000, which is actually lower than what we do today. In terms of what we actually do achieve in terms of revenue per site, so I think we have about roughly 400 sites across airports and non-airports. The airport side, the revenue we make from each site is actually around 200,000. While it's outside the airport sector, it's about, say, roughly 60,000. And some of the reason for that is in the airport sector, the regulation has been there for a long period of time. It's very well defined and very well enforced. So companies definitely have an understanding about their need to go through and meet these regulations. And again, we've been able to take them on the journey that Andrew talked about before around you start with compliance, you then go to engagement with the community, and then you get to optimizing your operations. Airports have understood that and gone a little bit further along than players outside that airport sector. Outside the airport sector, again, about 60,000. We have, again, the tools that take people through a journey around. We're not just a compliance tool, we're so much more than that, and taking them on the journey, and that continues to increase the revenue per site. The other important thing to note in this, if you look at our churn rate, it's very low. So an airport, once you win an airport, it's a low probability you're going to go through and lose them. Some of our airport customers have been there from the beginning. We've had them for 30 years. And rarely do we lose an airport customer. Where we have lost one, typically they come back to us 2 years later, realizing that the quality of the data and the solution that we offer is actually superior to some other newer competitors who just don't have the background scientific knowledge or acoustical knowledge about what our solutions offer. Outside the airport sector, it's a higher churn rate, but still we view relatively low at 3.8%. So view this as we are a recurring revenue model. Our revenue is quite sticky, and so once we get it, it's typically there for a long period of time. And that's an important thing to know about our model. We do have a level of non-recurring revenue that comes naturally from projects and from the installation of the solutions, but really what we focus on is the recurring revenue that we make. We have a higher percentage of recurring revenue. In terms of the contribution margin, and that contribution margin is looking at for every new level of recurring revenue that we make, how much do we actually hold on to once you take out those direct costs, that are variable direct costs specific to that customer. And it's actually pretty high. We make on average, around 80%, a bit more in the airport sector than non-airports, but on average, that's around 80%. So if you, it's a pretty good model, we look from that standpoint, pretty good revenue per site, very low churn rate, and a decent contribution margin. And again, we're participating in what we see as a much larger market without any one competitor we think has the global breadth that we have, or has kind of the depth of the technology that we offer. In terms of the actual financials, we recently reported our first half for FY21. And on the headline, everything was an improvement over what we did of the second half. So we had revenue of 23.6 million, which was a record for the company. The previous half was 20.1 million. Of that revenue, 85% was recurring, so very good kind of recurring revenue model versus 77% in the previous half. That's obviously dictated by the level of non-recurring revenue that we make each period. Gross margin of 41%, which is an improvement off the previous half of 32%. We still view that gross margin as too low, and we continue to go through and take transformational initiatives to go through and push that margin up. And then the adjusted EBITDA was a loss of 3.6 million versus the previous period of 6.9 million. I do want to go through and make sure everyone's aware, when we talk about those numbers being up, the Envirosuite business bought a company called EMS Bro & Care, which is where the airports part of the business really came into. So the first half includes the full 6 months of EMS, while it's the second half of last year only includes 4 months of EMS. So that is actually driving a lot of the increase. So I want to make sure that's clear to everyone. We don't overstate what we've done. In terms of what we've done so far in this financial period in terms of sales, I think we would acknowledge that the first 2 quarters were a bit disappointing. We did just a little over 2 million in the first half. That is impacted by COVID and just nervousness of a business to go through and spend more, particularly on compliance-related projects, as well as just the mere fact that we brought 2 companies together. Trying to go through and get that focus and the discipline around and change the way people think about the products that they're selling. That also took a bit of time. But as we're just about to close Q3, we have a pretty good line of sight what we should be able to do. And we communicated before to the market, we expect to do about 2.1 million new ARR sales for Q3, which should be quite an improvement of what we've done in the previous 2 quarters. With a couple more days left to go in the quarter, we feel pretty good about staying with that number. For Q4, based on kind of weighted pipeline, we're looking at about 2.4 million. So we expect it to continue up. And we do hope this is actually, now we're bringing the companies together, there's a bit more certainty around how to operate in the COVID world. We'll continue to go through and see the opportunities increase. So I might just that's obviously a little bit about the financials. I'm going to hand it back now to Jason, just to wrap this up and talk a little more about where we're going forward. Jason.
Thanks, Matt. So I think you've seen through the presentation today what environmental intelligence is, how we fill that need in the marketplace, and how we're uniquely doing that. The quality and the quantity of the customers that we have got in place to validate not only what we're doing, but the actual need in the market gives us huge confidence. The fact that we're now showing an increased pipeline activity and the pipeline is being filled out across those 3 segments also is very good for us. Moving forward, we are going to be focused and disciplined on the markets that we pursue. We want to play in the markets that we know that we can win, and we can win sustainably. One of our advantages is we now do have a very solid global footprint, but we want to leverage that global footprint to focus primarily on the markets that we know that we can win, and that really is North America, parts of APAC, and parts of Europe. We are committed to building out and investing into being a product-led organisation, and that's a key part of our strategic pillar. We will continue to invest into great ideation. It's great that an Australian company is able to do this. We do know that we have got some great research facilities that we're aligned with, and we know that we have good innovation coming from within. So that's our opportunity to leverage that. The second part then is actually aggressive customer acquisition, and that is a part that we need to focus on and build out. As Matt showed, we've got 2 strong quarters remaining in this financial year, and we see that the next year is actually going to be stronger. So now it's about us executing on that strategy. So hopefully from today, you now have an understanding of what Envirosuite does, what we are focused on, the problem that we're solving, and our scale to achieve those great heights. So thank you, Elliot. If there's any questions at this point, we'd be happy to take them.
Wonderful. Thank you so much, guys. One of the questions we've got, and I think it's probably very relevant given the current conditions we're seeing here in Sydney with the water. Can you talk more to your water opportunity and why you are so excited about it?
Yes, I'll start first of all. I think the key part for the water is this is having a material impact on how a facility is running. So we focus in on 2 parts. First of all, we're totally unique in the way our model works. We're the only ones that use a combination of AI and deterministic modelling to come up with ways to drive value. We are focused on around a 20% return on investment, and that's through energy savings and chemical dosage savings. The other part is that this is a software-only play. So we're able to go in, connect into SCADA systems, and so the ability to roll this out en masse is a fantastic and enables us with a higher concentration here on the software mix from the business fundamentals as well. Is there anything else you want to add on the water side?
No, I think that's great. I mean, the only thing I think of is when I was talking with the team the other day about how much we tend to day-to-day take fresh water that we drink for granted. And events like what are occurring in Sydney put a significant amount of demand on the water pipeline to actually get that to our taps every day.
Yep.
And so we're definitely very part of that.
The only other thing to add on that, Elliot, is by 2025, 2/3 of the world's population will reside in water-stressed areas. We know that the investment in water over the coming decade will be one of the most significant investment areas.
Now, what is the likely revenue growth rate across the three markets that you guys do operate in, I guess in a short, medium, and long-term view?
We're certainly committed to 20% growth. We believe that that is absolutely achievable. As we're now starting to become more focused and disciplined in our customer acquisition and simplifying our product strategy, I would see in the subsequent years a significant growth on top of that.
Now, what sort of growth do you see in ARPS?
Yeah, so I would say on the airport side, probably not much growth. There's a few products we offer on the airport side that could see that revenue per site increase, but probably say around maybe 10% that could go up by. Some of the new products we've rolled out, which we call Insightful, or some of the tarmac monitoring solutions, can see that revenue per site continue to increase. Outside the airport sector, we believe that there is continued growth in there, but in terms of how much you go up, it probably depends on the continued product development, which is obviously what Andrew Barron has been brought on to do, and look how we continue to make that product even more relevant. But in terms of our own internal modeling, we've held that around $60,000 per site that we expect to go through as we continue with the growth. So hopefully that's a conservative estimate, and there'll just be more upside from there.
And expanding upon those sort of product ideals, do you have any other products in the mix right now that you will be looking to sort of bring out over the next 12 to 24 months?
I think the most exciting new capabilities are across two areas. One is the continued launch activities around our water products, which are still not at a global sort of launch phase yet. So we're going to continue to push those activities. And the second thing is what I mentioned in our industrial space, the convergence of our noise, vibration, air quality, odor, and dust solution into one global platform, and taking that to all of our customers and offering them the ability to sense things in their environment that they wouldn't have been able to before.
And guys, just to sort of wrap up, what is the path to profitability, or a free cash flow break even? Is it a target within the next 3 to 5 years, or are we thinking longer?
No, I think based on current operations, we expect break even will be sooner than that. But really, to go through and get to the long-term sustainable break even, I think we need to be at recurring revenue of about 50 million or higher. The reality about when we go through and get to break even, it really depends on how quickly we want to grow the operations. So as we see great opportunities in water, we want to accelerate the push into the water sector. That has an impact on kind of break even. But based on our current operations today, we've communicated that we expect to be break even on an adjusted EBITDA basis in Q4.
Well, guys, Jason, Andrew, and Matthew, thank you so much for taking the time out today to run us through the presentation and answering some questions. We really do appreciate it.
Thank you very much.
All right, Elliot.
Thanks, Elliot.